What if one single candle in gold holds the key to profitable trading? In this video, I'm sharing my strategy focused entirely on the specific candle, which appears almost every day at the same time. If you keep losing when trading gold, watch this video through to the end. I genuinely believe it could completely change your approach. Let's dive in. Now the setup will be around one candle almost every day, and it happens at a specific time. If you notice, this is the hourly chart of gold. If you notice this candle in red or pink, this is the candle that we'll be trading around. Now if you notice that around this candle, almost the side of the breakout is the bias for the day. Now it could be a short term, like for a few hours, or for 1 4-hour candle. Sometime it could be for the whole day. As an example, if you see this day here, the moment we break below, now we will be finding an entry here, but the moment we close below, we started pushing lower, the retracement, and then pushing lower. For this day, it was a little bit different. There was a reversal scenario here, so we will go through it. Same thing here, reversal, and then you see after the reversal, we're going to be discussing all of this, we started going up. And same thing here, reversal. Now for this one, we only lasted for one candle or around 2 candles, but this one is going to give you at least 1 to 1, or maybe if you have a precise entry, you could get 2 to 1 from this. And you see this one here, we started pushing all the way up, and sometime you'll be catching the low of the week or the low of the day, and sometimes the low of the month using this. However, we're going to be focusing on catching, 1 to 1, 2 to 1, and then letting the rest of the position run by itself. Maybe you're going to hold for a day, maybe for a week. But the whole premise is that we'll be focusing on one candle happening at the same time almost every day. Now let's remember one thing, that a candle is nothing but a range on a lower time frame, and it goes the opposite way. So a range, if you focus, or if you look at a range in time frame, and then you go to a higher time frame, you can see this as a candle. Now it could be an ideal range like this, or it could be something like this, but it's still a range. All right, so that is not an invention, that is not something new. Some people call this a theory, when in reality it's just a common sense. All right, so a candle is a range, and that is, range is liquidity. We're going to be focusing on these key levels, the high and the low of the candle, and that is also the high and the low of the range. The moment we see price going around these levels, we're going to be executing our trade. Remember that price is fractal, so a range is nothing but a candle on a higher time frame, and same thing, a candle is nothing but a range on a lower time frame. Now, as I said, the strategy will be around one candle, and this specific candle, the timing for it is 8 p.m. EST. So this is the hourly candle that we're going to be focusing on. It could be a bearish candle, it could be a bullish candle. In a bearish candle, we could go long or we could go short, and same thing here. In a bullish one, we could go long and we could go short. So the color of a candle does not matter much, but what matters the most, and it's more significant, is where the candle at and what happened on the next candle. So talking about the direction and entry, we could have a continuation scenario, we could have a reversal scenario. In a lot of times, I keep saying that continuations are better and they give you high reward to risk and high win rate. However, in this case, or in this specific strategy, I would say that reversals are actually easy. It's not easy, but it's more rewarding. It's higher reward to risk. And in my opinion, it's easier. At least I know where to set my stop loss because the manipulation already happened, but continuations are also, high probability, actually higher win rate here. Now for a continuation, this is the 8 p.m. hourly candle. What I'm looking for is, let's say this is the bullish candle. We're going to be looking for longs, especially if the 8 p.m. candle is at a key level. After that, we'd be looking for the continuation of the next candle, which is the 9 p.m. candle. Now I'm not going to go over the details, the exact details as a full trading plan. This is going to be, again, an inspiration, an eye opener, something that you could implement to your strategy. Now, you see this candle here going up? This is the candle that we're going to be entering at. Mostly, if you watch my candle continuity theory, the CCT, you're going to know that we can enter here. Actually, you can enter here with a risky entry, or you could enter after the breakout and then continue higher. Same thing in a bearish scenario. After the breakout here, stop loss above the wick and then look for the continuation, or a risky entry around this level. Now, what I want to focus on this video is just, the importance and significance of the 8 p.m. candle. How you can look for continuation, how it can give you a bias for the day, breaking above and then closing above, most likely going up, especially again if the 20 or the 8 p.m. candle is at a key level. Now for the reversal, and in my opinion, at least for me, this is easier to spot and this is easier to trade and it's more rewarding. So you could have a higher reward to risk. You could catch a lot of times the low of the day. This one, most of the time, is I would say the low or the high of the day. And I'll show you examples on the previous 2 days or the previous 3 days, and you're going to see how this is working out. Now, for the reversal, it could be a bullish candle going up, or it could be a bearish candle. It does not matter. But you see, we're going up. Maybe we're at a key level, all right? And that is just an extra thing to look at. And if you're using this, or if you're implementing this concept to your current strategy, then you should do this already. Hourly 8 p.m. candle. This candle here, this is the opening price of this candle, all right? And this is the closing price. So closing price, opening price. The moment we open, we started going up. We don't create a wick. You see here, what happened here is, first thing, we create a wick and then we push higher. In this scenario here, what happened is the opposite. We started going higher first to create the higher wick. And this is a reversal profile. So we get a sweep here. You can enter immediately here. Now, this is hourly. You could look for 1 minute or 5 minute entry here. The sweep, pushing lower. Then you can also take a continuation trade here. Same thing in a bullish scenario. We have a bearish candle. Now, it could be also a bullish candle. Again, it could be a bullish candle, and then we sweep the low of it. What happened here is this is the closing price of this candle, and this is the opening price. What happened is immediately starting going lower, sweeping previous candle low, and this candle here is what? It's a range, right? So it has a lot of liquidity on a 1 minute time frame. You could also look for a 1 minute entry or 5 minute entry. What happened here is sweep, going up, and I do have a lot of confluences that I apply to this, a lot of things that tells me how high probability or low probability this setup is. But these are things that we're going to be discussing in another video. This video is just about, the main idea, or just the tip of the iceberg. This next candle here, so you see how we close bullish here. Now what do we have? Continuation. We can enter here or at the breakout and then continue higher. Mostly after this manipulation, this becomes a very high probability one. So we have two scenarios, continuation or reversal. You can try both. I would suggest going to your chart, open gold on the hourly, and notice the 8 p.m. candle and how price behaves around this candle and what happened on the next candle on the 9 p.m. Based on what happened on that candle, you will see how price moves for the whole day. Now again, this video only offers insights to improve your strategy or a concept to blend and implement to your strategy. I would like to see your comments below if you want a complete guide around the same strategy. So if you want a full guide, then let me know in the comments. Let's go over the examples now. We're going to go to Trading View and show you how price behaves around that candle and give you a proof on what was happening the previous 3 days or 4 days. And I'll show you that this actually works. Okay, so this is the hourly chart. The first step that you want to do is go to the indicators tab and apply this indicator to the chart. So it's Asian session range. This is the one that I'm using. And just look up on YouTube Mulham trading indicators and you'll see a full tutorial and the exact settings that I'm having on this indicator. So you could have the same indicator as me. So this on blue is the Asian session range, and that is the one that we're going to be focusing on. All right. So you see how the start of Asia is what? 20 or 8 p.m. That is the one that we're going to be focusing on. Now, if you want another indicator that will just show you this candle here, you could have this one. Highlight candles by time, look it up. you're going to see that it just highlight that 8 p.m. candle. All right. So now we have this indicator here. I want to show you, for the previous days, how price behaves around this specific candle. Now you see here for this day, this is today. This is happening now. We can see that this candle is 8 p.m. If I put it in a rectangle, I'm going to see that price opens immediately to the lower side. I mean, it creates a wick to the upside, yeah, but it does not break above. The first thing we did is going lower. In a continuation scenario, what we want to see is creating a wick and then go higher, right? What happened here instead is a bullish candle, but we started going lower. We were creating a wick, but what happened is a sweep of the low. So what happened here is the sweep of the low, all right? So we took the low. Now you can look for a reversal and look at where price is reacting, all right? So you see that is a key level here. Price reacted to that key level, going higher. That is a setup by itself. Now, if you go to the 1 minute time frame and focus on what happened here, you see how this is the 8 p.m. This is 8 p.m. from here to around here, 21. All right, taking it to the high and then taking it to the low. You can see what happened here. This is the range of the 8 p.m. The moment we open here, actually, yeah, we just wicked up and then we started slowly going lower. The moment we take the low of this range, see here, and then we get a bullish candle, then we go lower, fill this range, and then go higher. You can take, I'm not gonna say there is a specific entry here. That's something that we're gonna be looking at in the next videos if you want, but an entry could be here. I'm not gonna say here, maybe here, because we already close aggressively above and then stop loss here. The first target is you can look for, because it's a 1 minute, then I could extend it to the high of the 8 p.m. and then you see what happened here. Now there is an entry on a 5 minute time frame also. What happened on a 5 minute time frame is failing, and you guys know, based on my previous video, the one secret that changed my trading forever, not closing below a specific level and not closing below this level means that we are about to reverse. What confirms the reversal? This candle here. It's a strong candle closing outside of the range. That is another entry with a stop below the low. That is a 5 minute entry. Now let's look at the previous. Actually, let me go to the 5 minute, yeah, to the 5 minute and look at what happened. The moment we break above the range, there is another entry. You could have taken this entry here with a stop just below because we confirm, or we have a confirmed breakout, and then you can target your 1-to-1. You see, and then you can extend it to 2-to-1. However, you see how precise the reversal and how it's higher reward to risk compared to the continuation. Now, again, let's go to the hourly, and I'll just go not to the low time frame, but show you what happened here. You see, 8 p.m. What happened is a sweep of the low and then break above. And you see what happened after? You could argue that this was almost the low of the day. What happened here is, I would say maybe on another broker, there was a sweep of the low. All right, so sweep of the low, going up. However, it did not last much. We're ranging and then going lower, taking the low again, pushing higher. Oh, this day here, what happened? We did not take the low. We close above. That is on a 5 minute. We could take a long entry all the way to here, to this key level. For this day, what you will see is that's a perfect scenario. What happened is sweep above the high and then pushing lower. Maybe let's look at this on the 1 minute time frame. All right, so going back, you see how the 8 p.m. starts from here to 21, which is around here. All right, so that is the range. This is a bearish candle. If we want a continuation, what do we want? We want to see price going above the opening price or the closing price of this candle, creating a wick, and then break out to the downside. But this is not what happened. What happened is taking the high and then failing to close above the high. Even on the 1 minute time frame, we failed to close. And then we decided, we're aggressively going lower. You can take an entry from a key level around this level, and then that is a scalp. going to the low of the APM and then continuing. So you see what you caught here? That is a very powerful trade. You know, much more than 1-to-1. It could be much more. On a 5-minute, let's see the entry that we could get on a 5-minute time frame. Right? So here you see how we failed to close on a 5-minute time frame. And again, based on the secret that I gave on last video, we failed to close above. That is the first sign of reversal. Now, another candle comes here. I'm not gonna take an entry on this. I could either take an entry on this candle and then stop just above, all right? Or the next one would be this candle here, a retracement on it. So it could wait maybe on a 1-minute time frame. If there is a key level here, I would enter here, or at the closure of this with a stop loss just above this high. And then you see either of those getting a very high reward to risk. Actually, this is crazy. Maybe you're not going to be taking profit at the low exactly, but let's say up to here, that is more than enough. Again, if you want another video going over the details, going over the confluences and blending everything together, applying market structure and everything and the direction, let me know in the comment. That's it for the video. If you like it, then make sure to hit the like button, subscribe to the channel, and share the video with your friends. I'll see you in the next video.